What's up, Malacas? Welcome to the NTC podcast for July 27th, 2019. It's Saturday night here in Phoenix, Arizona, and it is hotter than hell. I just want to touch on a couple things tonight. I know it's been a while since I have made a podcast here, so I want to get right into it here. And this is from some discussions that were made over Freedom Fest in Las Vegas here. And I just drives me freaking nuts, to be honest with you. I mean, a lot of people I had a lot of respect for. I don't know. But anyways, I'm not going to mention any names, so we'll get right into it here. Now, in 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 my nature, I am a deflationist. And what is a deflationist? Well, you got inflation theory and deflation theory. And I lean towards deflation theory. And there's a very good reason why. The, if you want to look at currency and money, inflation and deflation, this is the best explanation I have ever been given about it. Okay? Inflation is money. Everybody has it, nobody wants it. Deflation is money. Nobody has it, everybody wants it. That's the difference between inflation and deflation. The best description I think I've ever received. So going forward now, if you want to look at the 1929, the Great Depression, that was a deflationary depression. Deflationary money. Nobody had it, everybody wanted it. Okay, Venezuela, current day, hyperinflation, money. Everybody has it, nobody wants it. Okay, so now you understand the two of them. Where are we going from here? Again, I'm a deflationist, and I lean more towards a deflationary theory. And I'm just going to put out some evidence of why I believe that. Right now, we are sitting at Friday's close on the Dow was 27,192.45, Nasdaq 8,330.21, which was up 90, almost $92 on the day. S&P's at 3,025, again, almost up a percent. We're just kind of chopping around in this range, and I'll get to this chart here in a second. But why I feel we're going into a deflationary environment versus hyperinflationary, and some of the stuff I even heard that we're going to have a debt jubilee and everybody's going to get a jail free card. I'm like, this is absolute freaking nonsense, absolute nonsense. Look through history. It's crystal clear. Okay, when when governments, corporations, the general population are loaded up with debt, there's always, always, always a deflationary spiral that takes place to clear the debt off the books. The same way a forest fire rips through a forest to get rid of the old trees, the old dead shrubs, to provide for new growth. If you listen to my other previous videos here, you understand where U.S. dollars money comes from. It comes from a bond, meaning that people have to go into debt. They have to buy houses, they have to buy cars, they have to charge credit cards in order for currency to spring to life. Okay? Because that's where money comes from. It comes from a bond. Okay? The bond is issued by the central bank. Who's the central bank? Well, a little murky area there between the Federal Reserve and some private entities that you and I, and nobody knows who they are. 8 shareholders, I think, it's something like that. If you find out who they are, just leave a leave it in the description. I kind of have ideas, but I'm not going to go into that. So they loan money down to the Fed. The Fed loans it to the government. The government there monetizes these bonds, and money flows through the system. Every single dollar in existence, every one in your bank account, every one in your pocket is owed back to this central bank plus interest. That's what you need to understand. If you can understand that flow chart, perfect. You're going to understand this, no problem at all. Why do I think we're going into a deflationary depression versus a hyperinflationary depression? That's all I've been hearing about. Well, on one hand, I hear all these same people saying that we're going to have the biggest stock market crash of all time. Okay, I agree with that. I'll give you that. I agree with that. But at the same point, we're going to have hyperinflation. Okay, no, you can't have both. You can't have both. You can't be almost pregnant. Okay, it's one or the other. Okay, if we're going to go through a stock market crash, okay, and where this is going to end up, who knows? How bad it's going to be, I have my theories on that. We can get into that another time. I think it's going to be pretty bad. How in the hell are we going to get hyperinflation when I'm just going to use the Dow here as an example. I got the chart in front of me here. When this thing is peeling off 1,000 points a day, um, people are losing their jobs. Where are we going to get hyperinflation from out of this? Okay, in order for hyperinflation to take place, excess money has to be in the hands of the general populace. Okay, yes, we have hyperinflation right now, but it's in the stock market. You're looking at it right now. You're looking at Dow $27,192.45. Yes, from a low of 6,000 something in 2009 to where we are now. Correct. That's hyperinflation. It hasn't hit the pockets of the people. It hasn't hit the hands of the people. Therefore, there's not going to be any hyperinflation yet. Okay, and I say yet. But this money that you're seeing in this chart right here is wrapped up into 401ks, IRAs, hedge funds, this and that. When this thing decides to let go, I do not believe this money is going to end up in the hands of the people. I don't believe that to be the case. So as this thing is nosediving and crashing, okay, people are losing money, they're losing jobs, they're losing houses, they're losing cars, okay? That's not hyperinflationary. That's not at all. That is severely, severely deflationary. Now, one way we can get hyperinflation, and this is a remote possibility, but you see the squad, right? AOC and all these numbnuts in Congress and Bernie Sanders here talking about universal health care, free college for everybody, universal basic income. Now, if we get a universal basic income and we get all these freebies, then yes, you will see inflation and possibly hyperinflation, because that money is in direct hands of the general population. They are going to go out, they are going to spend it, they are going to buy food, buy cars, buy TVs, everything, thus driving the price of everything higher, because you have more money now chasing a set amount of goods. Supply and demand. Prices will rise and rise through the roof. All right. I hope I got that clear. Because I just what I what I heard over the weekend from a lot of people that I had a lot of respect for, I just take me to the bar and get me a beer, because I can't deal with this anymore. I can't take it. So that is my theory going forward. I mean, like I said, if this thing's just crashing down, we're not going to have hyperinflation. So that's just my stand on it. So let's look at the charts right now. Okay, this is a daily chart of the Dow Jones here. You can see this is our run up here into 2018, our first little correction we had there. This was last summer, and these are charts that I've had drawn for a while now. These are called rising wedges, and these are very bearish patterns. And you can see the trend, the bottom trend line of the rising wedge. Once it was broken, this had given way to the first leg down in the to the December lows. It came back up, tested that exact same support line, right, or resistance, I'm sorry, right where it broke that wedge and fell, came back again and fell all the way down. Now, this line right in this area here, this is a falling wedge. This is a bullish setup. And right, you can see when it popped out of the wedge, came back down, back tested it, never looked back. We are now in off the December lows, off to these highs right now where we're at. We are building another rising wedge. These are the highs we're at right now. This was the high at the February highs. that off this first leg here. Now, one big thing to point out is that here's the bottom of the trend line. You can see it tagged it beautifully right there. But we are building some serious negative divergence here. What is negative divergence? Look at the indicator down here, the MACD. All right. You got your February high right here. This is the high on the MACD. I'm just going to put my cursor right above the blue signal line. Okay. Now, come over here to the recent highs where we're at now. Okay, 27,000 and change. Look at the high on the indicator. It's lower. A lot lower. So we are building some negative divergence. Now, everybody's talking about a rate cut here at the end of the month, and that's another, don't even get me started on that. It's apparently it's already been priced into the market. That's why we're having these rallies here. If the Fed decides not to cut interest rates, is this going to be our catalyst to blow out of this wedge and allow these negative divergences to play out? Time will tell. We will see. But that is a very bearish signal right there. And as of last week, I am 100% net short off of these highs. I hope I'm right. All right, I want to go through and look at a couple other charts with you guys here. Let's look at gold. All right. Oh, what happened? There it is. Okay. There's our gold chart. Okay, this is, again, a daily chart of gold. This is going back a couple years, though, but you can see we have had this right on my dotted line cursor here. This has just been resistance for the last, gosh, 6-7 years almost, about the 1380 level. So we did break out of it. The breakout was not what I was hoping for. I was hoping for a lot bigger of a move. You can see once we came blowing out of this here, we started putting in a nice flag pattern. You can see the flag right here. Here's the pole coming up. I was hoping to get at least to see almost $1,500 out of this move. We didn't get anywhere close to it. But one thing I do want to show you guys is here is, okay, and this is what has me scared about gold. This is a better chart right here. You see the flag pole coming up, and you can see the flag form. Price is just compressing and compressing down. We had the breakout, but it's fallen right back down. Now, again, like I was talking on about the Dow in the last chart there. This is the recent high, or the first high we had in gold coming off of that breakout off the 1380 level. Look at the high. Look at the height of the MACD. This is the recent high we've had. This was last week at about 1451. We haven't even built the bottom yet. This is massive negative divergence. So gold bugs, everybody who's thinking gold's going to 10 grand an ounce, no, it's not. There's some downside coming. How much? I don't know. Is it going to retest that 1380 support level that we have right here? Possible, and bounce off of it. But everybody that I've talked to, the trade alerts I gave out for the gold miners here, I have closed them all out, taken profit on everything gold right now. I am sitting out waiting for this pattern to play out. This negative divergence will play out. Gold is going lower. So that's what I have on the market front for you guys, and it's just, yeah, I mean, the conversations that I was having, I was just blown away. And when you're taking this stuff into context, you can't see it for how you want it to be. You have to see it for what it is, and that's where a lot of people go wrong. A lot. I got into a lot of Bitcoin discussions here, and that I don't know how many people told me that Bitcoin is going to take over the US dollar. Again, we have fought world wars. Millions upon millions of people have died to establish the global dollar hegemony, the petrodollar, and the system we live under now. Do you honestly think that Bitcoin is going to take over and become the new currency of the world? I mean, come on, guys. Come on. Think about it. Think about that. If there is, if we are going to go into a digital currency, it'll be issued by a central bank and it will be debt based. It will not be decentralized. It will not be spent as an asset. It will be debt based, just like all the currencies are right now. So that is my thoughts on Bitcoin there. It's not going to take over the US dollar. Um, Again, if your deflationist theory, the dollar is going to get a lot stronger as we head into this crisis. Like again, the only way we're going to see this hyperinflation take place is if we get down low and the Federal Reserve, the central banks, the Treasury just start handing free money out to everybody. Then that would take us out of this deflationary spiral and put us on an inflationary course. How high of an inflationary course? How much money are they going to give everybody? That's one thing to look at. This is just so reminiscent of the 2008 crash and the lead up to the 2008 crash. And everybody back then, I mean, gold was on a bull run, but there was a reason gold was on a bull run. It came off the 2001, 2002 lows at $300 because Alan Greenspan lowered interest rates because the tech bubble had just popped. So he ignited the real estate bubble. All right? That is what kicked off, and that was an inflationary period. From 2002 until the crash up to 2008, that was an inflationary period. Why was it inflationary? Houses were going up in value. 10% a month in some places. Here in Phoenix, Arizona, I was watching the value of my house go up $10,000 every 3 weeks. Okay, so how did this become inflationary? Everybody's house was an ATM machine. So if you bought a house, yeah, your garage was pretty much filled with $100,000 to $200,000 in equity that you got to go out and spend. All right. So if you dump $100,000, $200,000 in everybody's lap over the course of 5 years, and they go out and spend it, driving prices higher because now there's more money chasing the set amount of goods, you're going to get inflation. Gold's going to rise. Oil's going to rise. Remember, oil went to $150 a barrel. It's not hard. It's not hard to figure this out. That's why the inflation theory, I can't buy it right now. I can't. So that's what I got now. I'll keep you guys posted here. My current trades right now, like I said, I am 100% net short. New positions I picked up over on Friday is started shorting Google off the highs from the pop from earnings. So we'll see how that goes. I'm slightly red on that trade, but I think we may come back and fill this gap. That would be beautiful if we do. I shorted Intel, INTC, on Thursday after hours, the pop into earnings, and that bled off all day Friday. That was a beautiful trade. I held that one literally all day. Other than that, just my index trades, some various securities I'm holding, like some banks and stuff. I'm just net short right now on everything. The only thing I'm really getting killed on is Starbucks. That thing is just the gift that keeps on giving if you're long. So, but it's a very small position, and I'm just adding into it as it runs higher and just bringing it shorten the drops coming down. So as of right now, I'm just at 27,000, and like I said, looking at this chart right here with the negative divergence building, we are off the trend line, and the MACD down here is now has turned negative. There is clear separation. I don't really want to be long on anything. So we are going to get a correction. How big? Well, the first level to look for is about 26.7, and we blow through that. You can see the lines right here. This will be a major area of support here. This the bottom trend line on this rising wedge. So breaks that, then all bets are off. We could go back and test some December lows there. So that's what I got, guys. Have a damn good weekend, and I will talk to you all hopefully soon this week.